Hello, everybody. We'll get started with the webinar at this time. Just give me a quick okay if you're hearing me clearly and seeing my screen all right. Type in the chat box if you would. Just waiting on a few more responses to make sure everybody's okay. All right, if anyone has any issues as we're going along, please let me know. Obviously, the topic today is technical analysis. We'll be looking at some live charts and seeing how the movements are going. There's certainly some fundamental news that's driving things right now as well, as has been the case for some time now. The China-U.S. Trade situation has been moving the charts quite a bit and has been the predominant force with the technical analysis entry points going along with it. Now, as we get going, keep in mind all investments have risk. That includes trading Forex, CFDs, spread betting, options trading. There's certainly risk involved with any trade you make. There's no guarantee you'll make profits, but obviously there's also good potential for making nice profits as well, which is why we're all here. And as we go through the strategies and the concepts, the idea is from an educational perspective to improve upon, hopefully, your strategy or to build a trading strategy that will hopefully bring you more success than losses. You can find the full risk disclosure statement on our main website on AUDUSD.com if you wish to read through it. As we go forward to look at some technical analysis, keep in mind there are a couple different ways people use the charts and go about technical analysis. We tend to lean more heavily in the webinars on manual methods of technical analysis, meaning drawing our own price levels, our support and resistance levels, drawing our own trend lines, finding breakthrough candles or potential spots for breakthroughs, and pairing that with the fundamental news to try and eliminate as many false signals as possible and be in potentially the best direction that we can line up. So other types of technical analysis can take advantage of different indicators, which are perfectly okay to use. On occasion, we go over an indicator here or there within the strategies, but indicators cannot necessarily account for new information in terms of fundamental news. You know, your RSI indicator, your Bollinger Bands, they don't know anything about China-U.S. trade negotiations, right? So the signals that indicators are giving you on the chart are good from a technical standpoint as they're designed, but can't take into account breaking news and that sort of thing necessarily. So a lot of times we lean on the manual methods because I think in the end it can be more productive to your strategy. So as we go along, feel free to ask questions, to give input. You don't have to wait to the end, as this slide would suggest, to ask questions. Anytime, interrupt me. If you want me to repeat something, feel free to ask. I'm always looking at the chat box there to see if anyone is asking questions or wanting to make comments. As we go into my demo account, we can take a look. This was from yesterday's webinar. The lines are there as we drew them yesterday. It was a crypto-based webinar, which is perfectly okay with technical analysis. Technical analysis goes very well with cryptocurrencies because they don't have fundamental news as much affecting them because cryptos are not tied to one nation's economy. You don't have to worry about jobs numbers or economic reports coming out of crypto land because there is no crypto land. So technical analysis tends to be even more effective on cryptos compared to many other assets. But as we looked at it yesterday, we saw this setup. It had already had a bull run yesterday, and then there was a support level that formed, and we drew right here. This line was our support level we drew yesterday. And so yesterday during the webinar, it was over here, okay? These are 30-minute candles. We were back in this area over here yesterday, and we saw the support level had already formed. We drew the line. And you can see where I drew these lines down here. What kind of pending order were we talking about setting up yesterday at this level right here? We're talking about a pending order if it broke the support that you could sell, if it broke the support line that we drew. And while we did the webinar, we went over how you'd set up that type of pending order. Does anyone know what we would have called that pending order yesterday? If we went back in time and you're at yesterday's webinar and you saw the support level, you drew this line and you said, hey, if it breaks the support and gets down to this level, I'll sell. What kind of pending order would that have been? I'll show you the options. Here's Bitcoin. We switched to, from type, we switched to pending order. And we could have put the at price on this line, which is what we were talking about. And if it dropped, which it did, eventually it broke the support and hit that line, you'd have been in on a sell from that spot. Not sell limit. Robinson, sell limit, sells from a higher point. Sell limit would have been if it came up to the resistance up here and then you sold, you program it to sell from a higher point than where it was. If you're programming it to sell from a lower point, you need to pick the sell stop. Okay, sell stop. We could have put the at price right here on this line that we drew here, around 69. Let's see if I can read it right. 69.88. Okay, so our at price would have been 69.88 yesterday, and that's where we drew the line. We said, listen, the USD was looking like it had reason to strengthen yesterday. Okay, and we said, well, if the USD strengthens much, it could pull Bitcoin down. So we said you could set up a sell stop below the support. If it breaks, you could get in. And a lot of times when a support level breaks, you have what's called a breakthrough candle, which is this candle right here, a larger candle than most of the prior candles. That's your breakthrough candle. So had you attended the webinar yesterday, had you maybe thought that was a good idea, I certainly wasn't telling anyone they should or should not do it. It was a suggestion of a potential strategy. Had you done that, your entry point, if it was 69.88, even if you waited and got out now, it's at 69.04. That's over $80 drop in Bitcoin. It really dropped about 100 because it came all the way down to here. So, but let's be conservative and say you got out now, not at the perfect spot, and you made $80 profit on the price of Bitcoin. If you had a one lot position on Bitcoin, how much would you have made with this simple technical analysis strategy? How much would you have made? $80 drop in Bitcoin. One lot is how much? How many coins? It says right here. One lot is 10 Bitcoin. So if it dropped $80 and you had 10 coins, how much did you make on a sell stop? If you entered at this line and it dropped $80 and you got out now. 80 times 10 coins, 800, exactly. So very simple. I mean, this is basic technical analysis strategy. We looked at the news. We said, hey, USD might have reason to strengthen. There was good news about US-China, okay? We said, hey, Bitcoin's been behaving like gold. When there's good news, Bitcoin's been weakening along with gold. There's been a correlation of late. So the cryptocurrencies have been acting like safe havens. When people are nervous about the markets, they're buying into the cryptocurrencies. And when they're happy about the economic situation, they're selling the cryptocurrencies, along with how people use gold as a safe haven. And the reason for that could be because they're not tied to any economy. So people feel safe to buy into cryptos when the economic environment seems bad, because cryptocurrencies aren't tied to any jobs numbers or economic reports anyplace, kind of like gold. So we've seen some correlation. So yesterday we saw the good news about US and China tweeted out and in the headlines that, hey, they're getting closer to a deal. We saw gold dropping, and we said, hey, if this support level breaks on Bitcoin, and even we also looked at the crypto 10 index and some of the other cryptos that were set up the same way. We said you could have a sell stop and take a shot at a drop here. And boom, it came to fruition, right? You're not always right, but that would have been a good one. And so a simple one lot position would have paid 800, a half a lot position would have paid 400, etc. Whatever trade size is right for you, you could have taken or set up with that sell stop move. Very easy payout, very simple strategy. Support level found. You have reason in your mind to think it might break the support and run the other way. You wait for confirmation of the support to get broken and get in with the sell stop. It automatically opens, and look at how it dropped straight down in a matter of 30 minutes today. Okay, that happened today, just a few hours ago. This dropped. Okay, so the pending order would have sat overnight from yesterday, from the webinar, and boom, that could have triggered in, and you could be experiencing a nice little profit there. Any questions on that? Any questions on pending orders? Okay, so let's go ahead. Let's take a look at the current fundamental news and see what the latest news is. This came out today. China's industrial profits post steepest fall in 8 months. Do you think that helps the trade negotiations or makes them harder? Do you think this makes it more likely that China will agree to a deal with the US or less likely? I have my opinion, and I'll share it with you in a moment. I'm curious what you all think. Yeah, Daniel, a lot of times traders will wait for confirmation of the momentum, right? If we go back, let's go back to, good question. Okay, we saw this acting as support. We see once it tried to break, it couldn't. And really, this was the support level here. So once, twice, 3 times, 4 times, 5, 6, 7, 8, 9, 10. It wasn't breaking the price level. So in your mind, you're thinking, okay, the markets are not letting that price level break. There has to be something new in the markets to cause that price level to get broken. It's going to take some momentum. And so you say, okay, if I put my entry just below that price level, then whatever it was that made it break that support must have been pretty big news. And if that's the case, it's probably not just going to break the support by a little bit. You'll probably have what's called a breakthrough candle, which is exactly what happened. It tested, it tested, it tested, it tested, it tested. And then what happened today? Good news again about China, which I'm about to show you. China and US trade negotiations, and boom, USD strengthens enough to break this support, and down goes Bitcoin. Okay? Good question. And so, yes, you're waiting for the breakthrough sometimes for confirmation of the direction you want to trade. That's how you use the stop orders, the buy stop and sell stop. It might seem counterintuitive to buy from a higher price or sell from a lower price, right? Why would you wait for it to go down and then sell? This is why. Waiting for confirmation of a breakthrough of the momentum. Sell stop, Daniel. The sell stop would have been set up below the support. Sell stop sells from a lower point. Sell limit, you could have set up from up here, that if this would have gone back up, if this had gone back, let me draw a line. If this had bounced and went back up, you could have said, okay, if it reaches this resistance level up here, sell. That's a sell limit. Programming it to sell from a higher point. Why might you have done that? Same reason. You're thinking USD has reason to be strong. Bitcoin has reason to weaken with gold. And so you're thinking if this came back up to the resistance, that it probably won't break it. So you could have had a sell limit if it came back up. And we talked about that yesterday as well. It just never happened. It never went back up. It broke the support. So you get in on the buy stop instead of up here at the resistance on the sell limit. Okay, the limit orders are the reversal. Sell limit, if it goes up, You think it'll go down, so you sell. The stop orders are continuation moves. If it goes down, you think it'll keep going down, so you sell. Okay? All right, good question. Let's go back to some of these stories. So let me go back to the question I was posing here. Is bad news for China's economy, again, this was today, just came out, industrial numbers, the worst in 8 months coming out of China. Do you think that's good news for the U.S. trade negotiations or bad? Do you think a weakening economy, further weakening economy in China is good or bad for a deal? Daniel, you're saying bad? Chris, you're saying good? I think it's good news. I think it's good news for a deal. What do you think is going to force China to make a deal? If their economy is doing really, really good in China, if China's economy was doing really good, they'd say, no deal. We're not going to deal with you. We don't need you. You know, they might tell Trump to go take a hike. But if their economy is doing horrible and they can't withstand the tariffs that Trump put on China, and Trump's threatening to put more tariffs next month if they don't get a deal, China's having worse and worse numbers. That puts pressure on them to say, okay, we'll make a deal. And then that's good for the market, right? Every time there's a story coming out that they're close to a deal, the markets are going up. If you see, they're reaching new highs yesterday, again today. Yeah. China's economy seems to be collapsing, right? That might be an exaggeration, but it's not doing well. And so that tends to be good for the negotiations because China is getting more desperate and realizes maybe they have to make a deal, right? Okay, so if you combine this article, China having more bad numbers, with this article, European shares hit 4-year high on fresh U.S.-China trade deal hopes. Okay, again today, same as yesterday, there's more news leaking out again that they're close to a deal. They're very close to a deal. You look at the words they're using now: imminent resolution to draw down the trade war with China. Imminent. That means there could be a deal at any time. If you look at the futures, look, they're all green. S&P 500 up again. NASDAQ up. Dow Jones up. S&P up. Dollar index up. You get the idea here. Bad news for China seems to be good news for negotiations for a deal, right? Which then is good news for the global economy, everyone feels. That's why everything's green. If you had to pick a direction, right now, look, what color do we see here? Which way is the sentiment going today? Before you start to do your technical analysis, it's good to get an idea which way is the wind blowing. Which way is the wind blowing? It's blowing up, right? It's bullish. Look, everything's green. There's not one thing on the board that's not green. The markets from yesterday were green. The futures coming into today are all green. Bullish sentiment. The headlines are bullish. U.S.-China trade deal hopes. Fresh hopes. Positive sentiment. Okay, so we get the picture. Bad news out of China. Good news for maybe a deal. We see it right in the headline. Okay, so let's then go to the economic schedule. Okay, are there any big announcements today that came in? Not really. Some mixed news out of Europe. Different areas of the European Union. Some positive announcements, some negative announcements, kind of mixed. Okay, and then we've got some announcements later today. Some big news coming in out of the U.S. later today. Look how many announcements. Over a dozen, 15, 20, 25, 30 announcements coming in just on the USD. Some announcements on the yen, the New Zealand dollar. This will play a role in how the charts move. But if you're scalping, if you're looking for a move right now, sentiment's positive. These announcements, the big ones, don't come in until about 3:30. Okay, that's 8:30 a.m. New York time. Okay, That's depending what your time zone is. If your GMT at 5, right? And that's what, 1:30 in the afternoon. So we've got some time before anything could mess up the current momentum, right? The current sentiment. And so, but keep in mind, this could change the sentiment 1:30 GMT time. So be aware when you might want to get out of a position if you're already in the money, or what effect there could be if you stay in the position. All right. So now let's go to the chart. Okay. Nothing scheduled for several hours. Let's look for possible entry points with technical analysis, keeping in mind what some of you have already said. You feel like there's bullish sentiment today for indices, for the US dollar, maybe bearish sentiment for the safe haven. If people are feeling bullish about the economy, the safe havens tend to drop. Okay. So let's go ahead. Let's look at gold. Let's see what's happening with gold. It'll be interesting to see if gold is in a spot that you might be able to take advantage of. Now, this is 30-minute candles. What has happened so far today? Let's look at 15-minute candles. What has gold done today? Gold has gone. Let me get rid of all these old lines, actually. Let's get rid of the lines. Okay, so gold pulled down today. Those are 15-minute candles. Gold already pulled down with the positive sentiment. And then just in the last 45 minutes, what's gold doing? Daniel, I use more than just one source. We've got investing.com. We've got Reuters I've got up here. Okay, so we also looked at Reuters. You can look at Bloomberg. You can look at lots of sources. The key is to look at sources you trust. And not just to trust that the information is accurate, but also trust that the news is reported quickly. Okay, you want the news to come quickly because timing is everything. You know, I've suggested in past webinars, and I'll suggest again, you know, every time Trump tweets something out, the markets tend to respond, right? If it's something about U.S.-China trade negotiation, if Trump tweets out, hey, things are going great, we're close to a deal, the market tends to respond to that tweet coming out. So, or the opposite if he says something negative. So how can you be one of the first to get that information to be able to act before these articles even come out? Sign up on his Twitter feed, right? And other people, not just him, other people that are influential. Yeah, why not watch Twitter? Sign up to be on the Twitter feed of prominent people who, when they talk, the markets listen. Okay? It's a very good idea. It's real-time information from people who tend to influence movements in the market. Okay? The only thing better than knowing what Trump's going to tweet before he tweets it is knowing it right after he tweets it. Okay? And anyone else that, you know, we used to always say Mario Draghi, but he's no longer the head of the financial decisions there in the European Union. They've got a new person. But any of those folks, if you're able to follow their real-time information and statements, very good information. Okay, so let's go back to the chart then. What we see, the downtrend was occurring today on gold, as expected, right? Good news about U.S.-China potentially. Gold pulled down some. Gold had reached 1463 almost, and then pulled down today and formed a bit of a support, predictably, right around 1457, 1458. Why do you think this downtrend stopped where it did? Look, it came down, 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 and then support, support, support. Look back here to the left. Look at your technical analysis. This was a breakthrough and support. Okay, this was an established breakthrough candle and then support level. So as this was dropping today, it makes sense that, boom, it paused right at that support level. Very predictable. Okay, so if If you already knew about the positive sentiment, you could have already profited on gold on the way down. Now it's on a support level. Gold is on a support level. What do you think would happen to this support level if all of a sudden a breaking story comes out that U.S.-China reached phase 1 trade deal? What do you think would happen to gold if an article came out today, unexpectedly, U.S.-China reached deal on phase 1? What would happen to gold? What are your predictions? Tell me. What would happen to this support level? Keep in mind, gold is a safe haven. A trade deal between U.S. and China would be deemed most likely good news for the market, which means indices, stocks might go up in response. What happens to the safe haven, like gold, when there's good news in the economy? Daniel, the opposite typically happens with safe havens. They tend to drop. Safe haven assets like gold tend to drop. People sell gold. It drops when there's good news in the economy, right? As a general rule. You never say 100% on anything, right? But safe havens tend to drop when there's good news. So if there's unexpected fundamental news that comes out that U.S. and China reach a deal, and I'm telling you for the last several days, they've been saying very close to a deal, very close to a deal. And every time you see that article, the market's in the green, like I just showed you, everything's in the green right now. So in terms of indices and stocks, in the green. So if there's a deal signed, there's a potential, there's good potential for gold to drop further. So what kind of pending order could you prepare right now, just in case good news comes out about China, U.S., what kind of pending order could you prepare below this support level? We just went over it with the crypto move from yesterday. Sell limit sells from a higher point. It's not the sell limit. Sell stop, yes, Robinson. So you could prepare a sell stop down here, somewhere below the support, that if it breaks that support, you're assuming there must have been good news for the market. It's okay, Daniel, it's understandable, especially if you're new to pending orders, to get mixed up between sell limit, sell stop, buy stop. They should have just named them something more easy, like sell from a lower point, buy from a higher point, sell from a higher point, sell from, it gets a little confusing with the terminology stop and limit. I understand. So just write it down someplace, and then you'll have it. So sell stop sells from a lower point. You could program it. We could do that now. I could program gold. I could say, okay, if it drops to 1457.3, I'll switch to pending order. I could say sell stop. If it drops to 1457.3, then maybe I believe there had to have been good news for the market for it to break that support. So I program 1457.3. If it drops to there, then I want to sell. Where might it make sense to put a stop loss? Back above what? Because if it's really good news for the market, it shouldn't break the support and then go back above the support, right? So if you're putting a stop loss, not everyone trades with a stop loss, but if you do, once it activates this sell, you're expecting it to drop rapidly. If it goes back above the support, then maybe that's where you say, okay, I get out of the sell. Okay, so maybe if it goes back up to 1458, or 1458.25, something like that, then you say, okay, I'm out if it goes back up. I'm sorry, that should be stop loss. 1458.25, and then take profit. That's something different. Okay, so type yes if you understand why you might put your stop loss back above the support. 1458.25. Type yes or okay if you're with me. Sell stop would be activated if this support gets broke. You're doing that because you think in order for that support to get broke, there'd have to be really good news for the market. All right. If the price doesn't hit it, it never opens. Okay. And if it does break the support, opens your trade, and then the opposite news comes and it reverses back up, you have your sell stop somewhere above that broken support to get out of the sell. Okay. Where might you put your take profit? At the next support level, right? So maybe you look and you say, okay, if this does start dropping, here's the next major support level down here. Look at the potential for profit from 14.57, let's say, all the way down to 14.52. That's $5 potential profit, and you're only risking $1 to your stop loss. Okay, with that example, you could put different numbers and different entries and different exits. That's okay, but what's important here is the concept of how to utilize a sell stop and why you might prefer to set up a sell stop. Okay, and so it makes sense. The fundamental news maybe is on your side. You're waiting for confirmation of a broken support to get in on the sell. That's the idea of the sell stop in this example. Okay, and so if I place that order, there you see the green line here? That's my pending order. If the market drops and hits that mark, it'll sell. Okay, my stop loss is this dotted red line back up here. If it activates the sell and drops, great. If it activates my sell and then reverses back up, I take a small loss. My loss potential is from here to here. My profit potential is from my entry all the way down to wherever I put my take profit, which could be down around this next support level, let's say 14.53 flat. So I could go back, let's modify, let's put a take profit mark, 14.53 as an example, modify. Okay, now you see a red dotted line for my take profit mark. Right at the next support level, technically speaking, that makes sense. If you're scalping, if it breaks the support and you're selling, you might get out to take your profit just before it reaches the next support level. As an example, right? As an example. Daniel, you're asking, do you always set above or below resistance support? When you're using technical analysis strategies, you want to use those price levels to your advantage. Because let me show you, it's not by accident that this old resistance level right here, resistance, became the support level. And it's not by accident or by chance that when this was dropping, where did it bounce back up from? The support level from over here. When it dropped again, where did it bounce back up from? The exact same level. When it came up this last time, where did it go back up from? The exact same price level. So these support and resistance levels, these price levels, create predictability within the movement. Okay? They don't always work. Nothing ever works 100% of the time. But look what's happened. If you were trading up from this support level today, you would have already profited once, twice, 3 times. And if it breaks the support, your stop loss on any buy position, you could have gotten out already. If it ever breaks the support, you can get out on your buy. Okay? So you could have been scalping the market 1, 2. And if you bought on this last time up, this rise up, how would you know where to get out? You could say, well, look at the resistance level. Look, resistance, back down, support, back up, resistance, back down, support, back up, resistance, back down, support, back up, and right on cue, it hit the resistance right here and started dropping again. Look how easy you could be scalping the market. You could be scalping on these little movements here. It's ranging between here and here. Back up, back down, back up, back down, back up, and now starting to come down again. Okay? So these price levels mean something. It's not just random movements on the chart. It's too often happening that reversals occur right at the resistance level and right at the support level, up and down, again and again. Eventually it'll break, right? Eventually it will break. it'll either break this resistance, in which case you could have a buy stop right here in case it breaks the resistance to buy. And you could have a sell stop, as we suggested, below the support in case it breaks the support to sell. And at the same time, you could be trading down from this resistance and up from this support. Okay? You only need to be right. What, 50% of the time when you're setting it up with a small risk to the other side to your stop loss and a much larger profit potential, you could be right 1 out of 3 times and still profit. But looking at the charts, you could see how you could be right 2 out of 3 times, 3 out of 4 times. Look how predictable the movements have been. Support level established, reversal back up off the support, reversal back up off the support, reversal back up off the support. Very predictable technical analysis. So you don't have to be right more than you're wrong. You actually can be wrong more than you're right and still profit, because your stop loss can be a shorter distance than your take profit. But looking at the chart, you start to realize I could be right a lot more than I'm wrong. I just have to use the price levels and my entry points in a smart way. And if you start to be even 50% accurate, hitting your take profit 50% of the time, hitting your stop loss 50% of the time, and your take profit is 2 or 3 times further away than your stop loss to the other side of the support level or resistance level, then now you really got something. Now you're on your way to nice profits potentially. Okay? Now that's not the only way to set things up. Sometimes people put their stop loss further away than their take profit, and that's okay too. There are different strategy concepts with that. But what we're going over now is a setup where maybe your stop loss is just a short distance to the other side and your take profit is 2 or 3 times that distance. That's okay too. All right, there's more than one right way to do things. Okay, good question. So what else can we look at? How about oil? Why do you think oil's climbing predictably? Why would oil climb when there's good news about U.S.-China trade negotiations? Why is oil being bullish predictably, easily predictably? What happens to oil price when the economy is doing good? When there's good news for the global economic environment? Yeah, it goes up, right? Because a good economy increases demand on oil, right? A lot of this goes back to simple supply and demand. If people anticipate a deal between U.S. and China, they say, wow, that'll be good for U.S. economy, for the Chinese economy, if they can reach a deal, right? And if people think that's good for the 2 largest economies in the world, that good news might come, that helps to drive energy prices up. Natural gas, gasoline, oil, etc. Okay? Again, these concepts are never right 100% of the time, but they're right more than they're wrong in terms of these general relationships. Good economic news, oil tends to go up. Sure, there could be outlier reasons for oil to drop when there's good economic news, but many times when there's good economic news breaking, we see that tends to help oil be bullish. And it tends to have gold dropping with good economic news, and vice versa. If there was a tweet that came out right now from Trump, if you're on his Twitter feed and you see something come out that says bad news, no deal, I'm going to increase tariffs on China, what do you think would happen to oil? If all of a sudden everyone said, wow, that's terrible news. Yeah, exactly. Oil price would probably plunge down, right? Down, down, down. And you never know. That's the thing about trading. You can look at the technical analysis. You can say, wow, this is a strong uptrend. You could say oil just dropped to this support level. See, resistance, breakthrough candle. There's your typical breakthrough candle. And now it's on the support level, right? So you might say, wow, that's a potentially good spot to buy. And you might buy, right? And then all of a sudden, bad news comes out, it breaks the support and plunges. Okay, as an example. That's why you always have to think about your risk management. You can't be so confident that you know for sure you're going to be right. okay? You have to be willing to say, if I'm wrong, I'm not going to blow my whole account maybe, right? Maybe you have a stop loss down there somewhere or a hedge position ready to trade in the opposite direction to cover yourself. Whatever the case may be, you have to go with what you know now, bullish market, right? That's what we know now. But you have to also prepare for what you don't know. What breaking news could come out that you aren't able to predict? And that's where your pending orders or your stop loss marks come in, just in case something happens that you weren't able to predict. Okay? Basically, you're predicting what could happen with your pending orders, right? What might happen. And also with your stop loss. The stop loss is in the direction opposite of what you think, obviously. You're preparing in case you're wrong, in case something happens that you don't know is going to happen. All right? You see it's bouncing off this little support level, and that's only on 15-minute candles. Look at it bounce. It could break it, right? But temporarily, at least, you see it hits that support level I drew. Right on that exact mark, it hesitates and bounces back up. You know, that little movement, that little bounce from here to here, some people are trading on that and already profiting. Just that little bounce from here to here. As long as it bounces more than the spread, you can profit. That's called scalping, getting in and out quick. You see these bounces very, very often at support and resistance levels. Okay? So this stuff happens all the time. It's very predictable. Okay? Why do you think the Australian dollar is climbing? Good news out of China. Why does that cause the Australian dollar to strengthen? Why do we see an uptrend today on the Australian dollar? Who does Australia sell their number one exports to? Australia's number one export, iron ore. Number two export, coal. Who's the biggest buyer of their iron ore and coal? China, exactly. China. So good news for China potentially with the trade negotiations means good news for the Australian dollar. So people are buying the Australian dollar today as they saw that there could be an imminent deal between US and China. Boom, Australian dollar strengthens. It's predictable. So now if you're doing your technical analysis with the fundamental news at your back, right? You could have drawn your line. You could have said, okay, resistance level here. If it breaks the resistance, buy stop, I'm buying. Easy profit. Why did you prepare a buy stop? Because you knew there was good news for the Australian dollar potentially. If it broke through the resistance, that confirms the uptrend, boom, you're in. You could have already taken your profit once it consolidated here, once it started moving sideways, and you're out. Easy profit, right? Going with the wind, with the fundamental news, using your technical analysis for proper entry points. It really becomes simple if you keep it simple, okay? And the best trading strategies are simple strategies. Look at the fundamental news, see which way the wind is blowing. Is it green? Is it red? Then come to the chart, find your technical entry points and go. Do what you think is right, and you should be able to find some good success, okay? All right, that's it for today. I think we've gone on long enough, about 45 minutes or so. Any last questions before we end things? Okay, I don't see anything coming in. Thank you all very much for joining the webinar. It was actually a very nice session. We had some good questions and participation. It always makes it better when we get some input from both sides. Feel free to come to any of the webinars. By the way, those registration links that you guys received by email, they work over and over. Those are, I add the new dates for the next week and the next week to the same link. Okay, but new emails will come out, or ask your account manager for the registration links. There are 3 separate links, one that says fundamental analysis, one that says technical, and one that says crypto. Okay, those are the 3 registration links. You're welcome to come to any and all of the webinars, okay? All right, great, everybody. Thank you for joining, and good luck with your trading. I hope to see you all profiting. Bye for now.